Isn't that fascinating? The market is retracing after Bitcoin has hit a new all-time high. Everything is down except the Pengu token. Now why is that? Is this still manipulation or is Pengu completely different to all the other altcoins? Let's have a look at the data again most people are not considering. So obviously today is quite different. But even this week is different. This week Pengu was the top performing altcoin across all the altcoins. But that then begs the question, are we going to see something like this? The Thanksgiving turkey chart, everything is nice and rosy until one day, bam, a surprise happens and everything implodes. This is what's going to happen for Pengu. The attention on the asset clearly does not suggest so. The last video on the asset published just 48 hours ago outperformed the average video by quite a bit, 2.3x of what an average video makes. And that's interesting, given that the trading volume, historically speaking, isn't really that high. So when Pengu launched, there was a lot of trading on the Solana chain. This is the data on Solana. We had a few flickers of interest again afterwards, but still, right, in the grand scheme of things, the trading volume isn't that high. The trading volume is also somewhat balanced, as in small retail tends to have a somewhat stable fraction of the overall volume. What we're seeing here is the number of holders over time. So it fluctuates to a degree, but stays stable. Once we include a minimum holding threshold though, then the chart isn't as pretty. Then we suddenly see an overall decline long term. Now, how is that possible? Why is the number of holders declining? And at the same time, the price of Pengu performs that well. Leverage and accumulation by the market makers and centralized exchanges is one of the answers. So when we look at the trading volume, Pengu is mainly traded on the Binance Smart Chain. We have $225 million worth of trading volume in the last 24 hours on the spot market. Now on the perpetual futures market, we've got even more trading volume, 1.3 billion on Binance. And that is potentially problematic over the long term. Because why do people get into perpetual futures? It's in order to get in and out of a token very quickly. Because we buy spot in order to just hold a token long term. We use the perpetual futures if we want to have minimum slippage and we are okay with the higher financing costs. It's really the long term that raises some eyebrows. Pudgy Penguins is one of the few meme coins that raised money early on. There was 9 million raised by 1KX Capital and then afterwards another 11 million raised by the Founders Fund. So that was in 2023 and 2024. And so it's very different to, for example, a Pump.fun ecosystem token where we've got a static supply. With Pudgy Penguins, there's all kinds of different parties that have or get in the future some kind of allocation. The team, for example, still has 18% of the supply locked. The company another 11% of the supply. Now here's a problem with those locked tokens. Sometimes there are over-the-counter or OTC deals happening. So people within the team might sell their allocation, their future unlocks, to outsiders. And they do this with a price discount. So they simply just want to cash out early and then they sell maybe with 10, 20, 30% discount to some other party that then gets also those tokens in the future, but they might already do the hedging today. So they might bet on falling prices with the perpetual futures, which then through arbitrage bots spills over to the spot market as well. That's a potential risk with a token that unlocks over time. Now the tokenomics aren't too aggressive, right? We've already got 63 billion Pengu tokens floating and this will only grow to 89 billion. So the growth rate isn't too bad, especially since this happens until the year 2029. Still, it's the perpetual futures, it's the levered bets on the price that move Pudgy Penguins. And since the supply is mainly held by the market makers, that means that increased volatility is in their interest. The more volatility there is on the token, the more people buy the token potentially. Thus, there's a lot of influence on the price by the market makers. And we can see this in this chart here. This is the funding rate of Pudgy Penguins over time. And where the majority of perpetual futures traders bet on rising prices, that's when the price crashed. When then the majority of traders bet on falling prices, that's when the price rose and we had a short squeeze. So the price always moves in the exact opposite direction of where the masses put their money on. The price, in other words, goes the way of maximum pain. Fundamentally, we have to understand this the following. Imagine you run a sports betting house. You offer bets on an outcome of a game. But at the same time, you also bought the referee. So you've got impact on the outcome of the game. How about that? Binance is offering bets on the price, but at the same time, they've got influence on the price because they own a lot of the supply. I think that's what's going on with Pudgy penguins. As a lot of people bet on falling prices, they simply just squeeze out those people and make money with the liquidation fees. As a lot of people bet on rising prices, they are just dumping Pudgy penguins. Now recently things have shifted because after so many people got squeezed out of the market, all the shorts have lost their money and now the majority is actually betting on rising prices again. We have positive funding rates. Just have a look at the liquidations over time. As the price went up, all the shorts got mainly liquidated. But here's the thing, there is strong correlation between the open interest or the amounts of bets on the price and the spot price itself. Again, showing that the price, the spot price, is impacted by whatever happens on the perpetual futures. And over the long term, we are at all-time highs in the leverage of Pudgy penguins. In other words, many people are now betting on rising prices. And again, this leverage might deflate at some point. Just have a look at the Pengu price relative to Solana. It's up pretty much at exactly all-time high. And betting on falling prices of Pengu right now seems to not be the popular trade. So it might not actually make sense to potentially dabble into some shorts. Now again, right, shorts tend to get short squeezed. If this becomes a popular trade, of course the price continues to rise. But right now it's not a popular trade, despite this chart here. The question is always, how much risk is there for potential future manipulations? In the Solana Memecoin ecosystem, Pudgy penguins is now at 2 billions. And there's only Bonk that's larger with 2.2 billions. Is it really likely that Pudgy penguins goes to 4 billion or to 6 billion when the overall market stays flat? Of course, if Bitcoin doubles, Pudgy penguin can double as well, but just in relative terms, right? In terms of outperformance. Are we really going to see another 100 or 200% outperformance given this overall ecosystem? When we look at meme coins outside of Solana, right, Ethereum-based meme coins, we do have larger values, right? We've got Pepe with 5 billion and Shiba Inu with 7 and Dogecoin with 28. But I don't think it's very likely that Pudgy penguins will suddenly beat Pepe and make another 2 or 3x from here. So really, it's just a matter of time until the Pengu token goes down. Right now, there's a lot of attention on the token. It makes sense. It's one of the few outperformers. But mark my words, at one point, we will see the surprise. And then the shorts that are in the position, they make the big money. I am currently not invested in Pengu in any direction. I'm not long, I'm not short, but I am considering to dabble a little bit in the short positions. Have a very tight stop loss. Then if we get stopped out, fine. If there's a squeeze, we just enter the stop again. And so there might be 3, 4, 5 trades that get stopped out where we lose 1 or 2%. But if then one day Pudgy penguin suddenly crashes by 10, 20, 30%, then that's where the big money is made. The leverage will not extend forever. And the market cap, relatively speaking, is already ultra high. And the long-term tokenomics aren't that great. And the valuation of Pengu relative to Solana is also close to all-time highs. So I believe it makes sense to go against the grain. Currently, the funding rates for betting on falling prices of Pudgy penguins are still negative. So we actually get paid to bet on falling prices. And I think that's an opportunity. It is not a trade that has to work out tomorrow. It's not a trade that has to work out the next week. But I do believe that there will be a trade at some point in a month or maybe in 2 months where this will work, where it will work to bet on falling prices. And then the question is only, what's the best risk management? Is the best risk management to have tight stop losses and re-enter all the time as we get stopped out? Or is it best to potentially double down, as in add more collateral as the squeeze might happen? There's all kinds of different strategies. I think the best is always to just re-enter, to lose a few times, to then have the big winner at the end as the leverage deflates again. Now there's the approach to simply just buy into Bitcoin long term, right? To buy, say, once a month to dollar cost average in, say $1,000 every month. And that is a winning strategy because there is a lot of volatility, and the more volatile an asset is, the better it is suited for regular purchases. And had I done this, I would have gotten this light gray return. Instead, I outperformed just dollar cost averaging into Bitcoin. I got this black line in return. The Bitcoin maximalists say that we should forget about all of the altcoins and that Bitcoin outperforms the altcoins most of the time. Everything goes down against Bitcoin long term. So in the end, just stick with Bitcoin. That's what the maximalists say. But I think it's better to actually take advantage of this market asymmetry. Because while the Bitcoin maxis are right that most altcoins underperform Bitcoin most of the time, and that trying to find the next 10 or 100x meme coin is a losing battle long term, while this is true, we can still take advantage of that underperformance. The altcoins tend to do so poorly because of supply expansion. So users of the platform of the altcoin, or maybe the early investors in the token, or maybe the team, they get token unlocks. They get more and more tokens available over time, and they might dump those tokens on the market, depressing the price. For example, here, this is the circulating supply of the balancer token. It's a very typical DeFi token. We see this typically across the entire altcoin market. And if the supply grows faster than the demand, of course the price has to come down, at least relatively speaking. And so this is then the balancer price relative to Ethereum. It just goes down all the time. And we can flip this. We can take advantage of this. If we go long Ethereum and short balancer, or if we take out a loan in balancer, swap this into Ethereum, we get this return here. And that's how I made this outperformance over buying and holding Bitcoin. I shorted poor altcoins and went long Bitcoin, Ethereum, and Solana. And in this video, I actually want to share this for free over here. How can we get this kind of return? How did I achieve this kind of return in the past? There are several approaches, and I'm sharing now the one that I'm using for several years already. Go to the platform Aave. So that's aave.com and open the app. Over here, you can borrow several tokens. So you're providing some kind of collateral. It's a borrowing and lending platform. You provide collateral and then you can borrow against that collateral. And what you want to borrow is the balancer token, right? That's a token that tends to go down versus Ethereum all the time. Thus, if we borrow balancer, if you've got a loan in balancer, and we then swap that balancer versus Ethereum, and then we wait for balancer to continue to go down versus Ethereum, we suddenly have profit, right? Our loan, our debt is going down in value. Our asset is going up, relatively speaking. And then once we want to lock in our profit, we just pay back the loan with the appreciated asset. It doesn't cost much at all to borrow balancer. It's 0.31% per annum. Yet the price is going down so consistently. I made tutorial videos to the premium members about this strategy in detail in the past. And again, it was a very nice moneymaker. This is why people stay subscribed to premium, because the membership basically pays for itself if you've got some capital. But I found an approach that's even better, and that's currently my focus. I started this out 2.5 months ago. It's again relative valuation bets, but it's not with borrowing and lending platforms. It's instead with perpetual futures. I started with 40K, and then after 2.5 months, this turned into 60K, so 50% return. I don't expect that the growth rate will be that strong going forward, but still, I do think that in general, this is a winning strategy, right? Simply because the insiders, etc., they cash out over time, long term, and depress the price. The problem with perpetual futures is that we need to be very diligent around our risk management. We have to use very tight stop losses, and we then have to adjust those stop losses regularly. We have to find the asset that's most deflationary, that might have seen a short squeeze, etc. And while I'm sharing all the trades that I personally do, many people don't have the time to copy trade. And so I got asked regularly by the members, can't you just provide some kind of liquidity pool? We provide money to that pool and then you trade for us. And I finally started this just 2 days ago. It does not use Aave. It does not use borrowing and lending platforms. Instead, it uses Hyperliquid. And this is a tutorial video on how to use the Bitcoin strategy copy trading vault on Hyperliquid. So that's this platform over here. The platform is growing massively. So in less than a year, it attracted almost 2 billion worth of value. And I've created a vault, so a capital pool where the annual members of Bitcoin strategy can deposit to and then simply get the same kinds of return. If you're just starting out and you've got some time and you don't have that much capital yet, then you can do this all manually, right? You can just go through the tutorials, you can watch them and then learn how to do this all yourself. I am sharing my own trades as well, and there are plenty of people that do this very successfully in the community. So if your crypto portfolio isn't yet $5,000 or $10,000, it's below that, then it makes sense to just go with the monthly membership and do the trading yourself. But if you don't have time, if you maybe got a business to run and you've got way larger amounts to deal with, you don't want to hassle with all the risk management, etc., then the annual membership is for you. Because for the annual membership, where by the way, you're also saving a bit of money, you get access to the copy trading vault as well, with all the instructions on how to actually deposit your funds. And while I cannot guarantee that we make another 50% in the next 2.5 months, I will do my best to achieve positive returns. This strategy has outperformed buying and holding Bitcoin for more than 4 years now, and I don't see any reason why it shouldn't do the same using perpetual futures instead of borrowing in lending platforms that we used in the past. A link to Premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!